All right, welcome everybody. Welcome to the first YouTube stream switching over from Twitch. Welcome everybody. I'm gonna take a second to catch up with chat, but today the plan is I'm gonna run through market outlook, cover general plans on Bitcoin, what I'm thinking, how I'm trading it. Look at shitcoins a little bit here and there, and then we'll do a bit of a dive into scalping because that's what I'm doing these days. I'm not really trading Bitcoin all that much, although I do actually have a trade open right now. But most of my trading is on these high volatility shitcoins, so we'll have a conversation about that. I'm gonna cover some basics because kind of realized that a lot of the time when I talk about scalping, I just like get right into the more serious stuff and kind of gloss over some of the more basic concepts, which I do imagine a lot of you guys are a little bit more advanced, so you probably want that, but it's important that you have a good, foundational understanding of things instead of just talking about more heavy things. So that's the plan for today. I do have a couple of predetermined topics that we'll get into. But yeah, thanks everybody for showing up to the first YouTube stream. I have about a third of my normal viewers, so I think people got lost on Twitch and forgot how to make it over here, but all good, all good. Okay, let's close this bitch out. Let me catch up with chat first, and then we'll get into things. Might have been a couple of questions I need to address. Appreciate all the good mornings, top of the morning, good evenings. Love that shit. Actually, I need to try to avoid profanity now. Good luck. Talk about execution. Yeah, we can do that. I'll even make a note for you. Let's see. Quick question: if a shitcoin is falling in tick size / trades, you don't mean tick size, you mean tick rate. Can you assume that it is more likely to trend in a new direction instead of ranging? No. Tick rate, the number of trades going through a market, isn't going to increase or decrease the likelihood of it ranging. That doesn't necessarily have anything to do with whether it's in momentum or reversion mode. You need to pay attention to other factors. You could have a high tick rate and have it be trending, and you could have a high tick rate and have it be balancing and reverting. We can cover that a bit later potentially. It is fair to assume there's less PvP. And it's simple, guys. If the tick rate falls off, I'm out of there. I'm done for the day. All right, guys. I appreciate all the good mornings and all that wholesome vibes. Definitely, we need to focus on bringing back the wholesome vibes in our space, boys. Everybody's so upset and angry all the time. You open up your timeline and people are fighting amongst one another like children. We need to try to amplify the wholesome vibes a little bit more. Enough of this childish back and forths. Well, you said this. Aren't we? We're supposed to be adults. Hey Mag, what is your liquidity level indicator on the right? Been looking at it for ages. Well, it's not really an indication of liquidity. It is this. It is the visible range volume profile. So you can just type in VRVP into TradingView and it will come up. These are the settings that I run. One of the more important things is you increase the row size a lot, so it's not blocky. Just to give you an example, That's disgusting. Need to have have a lot of rows up in there. You can get a little more detail that way. But to be clear, this is not an indication of liquidity. This is a record of the volume that has transacted. Liquidity would be the resting orders in the book. What we're looking at here is a record of where the transactions that have already taken place. So this is a record of the market orders. I don't have the background music set up today. We're gonna go raw today with no background music. We can do that next week. I don't have the right background music saved on this account. There was some talk about sharing my playlist. I'm going to make an effort to save my playlist over to this YouTube account so that I can share them. It's really not high on my priority by any means. I'm not gonna lie to you. It's definitely low priority for me, right? There's a lot more things in life, that are more important than sharing my playlist. But I do get asked about that at least a couple times per stream, so eventually I'll make the effort to get it done. Yeah, we're going raw. All right, guys. I hate to say this because it's a little bit cringe, but please do me a favor and press that like button because it's my first stream, so I want the YouTube algo to acknowledge that people actually like what I'm saying. So press that like button for me. Something that we didn't have to worry about on Twitch, but the likes and subs really matter a lot for the YouTube algorithm. All right, guys. So let's go ahead and get into things here. I'm going to do a rundown on Bitcoin. We'll top to bottom, high time frame down into the lower time frame, and we can probably talk about altcoins from there. I gotta really try to censor myself. It's my default to use profanity, so I'm gonna try to not do that. But honestly, good luck. YouTube better than Twitch? Yeah, it's pretty much up in the air right now. I think there's a strong arguments for both, definitely. Can you explain which market profile you use in the settings? I mean, I don't really want to share the specific one that I'm using, but you can just, honestly, it's pretty easy, boys. Just go to Google, type in TradingView market profile, and a bunch of them will pop up. Just look through and find one that looks good to you, and just set it up. The only thing that you really need to worry about with the settings is going to be the tick size. And guys, we don't need to overcomplicate tick size. Just eyeball it. A lot of times with footprints and with market profile, with volume profile, people get lost in the sauce with tick size. People sit there and wonder what the perfect tick size is. Oh, I need a perfect tick size, blah, blah, blah. That doesn't really exist. Markets are dynamic. Volatility increases and decreases all the time. So it really is a lot better to just eyeball. Yeah, we have some conflicting views on whether Twitch or YouTube is better. We're just testing this out today, guys. One of the main reasons why we're doing YouTube today is because I want to have a better replay option, which somebody immediately put in the chat right now. The replay is a little bit better on YouTube, which is why the main reason why we're doing this. Also, Twitch has put some really annoying restrictions on my account recently because somebody reported me for profanity and other things, which is ridiculous, but it's the world we live in. So I got reports, and now I have restrictions on my Twitch account, which I find to be very annoying. Do you think TradingView with market profile is enough compared to Sierra or ATAS subscription? Well, you don't need to subscribe to ATAS. ATAS is free, which the quality of, or I think I'm saying it wrong, by the way. The actual developers call it ATAS, which it's a terrible name, but ATAS is a really solid program when you account for the fact that it's free and it basically has every tool that you could want. Now, the one tool I don't use on a toss is the TPO. I just use the TradingView TPO. It works just fine, So no, I don't think you need Sierra. If you're trading legacy markets, right? If you're trading the Nasdaq or the S&P, then I would almost for sure say I would recommend using Sierra because it's going to be a better TPO, and you can execute through it. But with crypto, I wouldn't really worry too much about Sierra as much. Sierra is very slow and time consuming with setting up and with setting up, for different assets and stuff, right? If you just trade the Nasdaq every day, then Sierra is going to be fine, or probably going to be not fine, going to be your best option. But if you're trading crypto and you need to look at a different asset a couple times a week, a toss and TradingView is a really good combo. That's what I'm working with. Why would you not share the indicator? Because I share enough. You guys can, figure some things out for yourself. It's one thing that my mentor did really well with me. A mistake that I make a lot of times is I spell things out too easily for my audience. I just give away way too much, and I just explain it very easily so that you just understand what I'm saying right away. My mentor never did that for me. He would give me pieces of the puzzle and force me to connect the dots myself. I think that's a better way to learn because you're going to practice your own critical thinking for yourself. And on top of that, you're going to find everything a lot more rewarding because when you work for things, you appreciate it more. I've noticed over the years, giving information away to people, they don't really appreciate it as much as if I gave them pieces of it and they worked to figure it out themselves. So that is the direction that I want to move with some things. You use DOM when scalping crypto. I really only use a depth of market or a ladder just for order execution. I don't really do it for analysis anymore. So I literally just use a DOM to click limits into the book easily, which I mostly use for take profits. Okay, guys, I caught up with chat. Let's go ahead and I'm going to ignore chat for a moment, and I'm going to run through my view on the markets. So let's go ahead and get into Bitcoin. So essentially where we're at with Bitcoin is we're waiting for upside momentum to get lost and downside reversion to begin again. So if we run top to bottom throughout the year, we've been in a pretty reasonably strong bull trend since the yearly open. But we can see obvious momentum loss as price is starting to round out. This most recent impulse was incredibly weak compared to the previous impulses. So that's a strong indication that momentum is being lost. So basically, until we get a significant reclaim, I'm bearish or at the very least more conservative, expecting that all this price action that we're looking at right now is ultimately going to result in a dead cat bounce. So if we look at this, I'll get a little bit of homework, guys. Go and look at the 2021 top that were before the May nuke, right? So go and look at the price action in February, March, April, and May of 2021. Look at that and compare it to this. Very, very strong similarities between the market structure and the momentum loss. So ultimately what my gut tells me is that this is going to eventually lose momentum where we're at right now, right? So we built a base. We got a really quick response dead cat off of the news. I would really more or less ignore this. I think we're going to keep drifting up. Eventually, we're going to find resistance probably around either the 28K area or into the 29K area. There's a lot of strong resistance in 29 and 28K. So that's kind of where I think the upside momentum is going to get lost. I am actually long right now, which I'll talk about when we go to the medium time frame conversation. But yeah, ultimately, I think that this is going to result in a dead cat, that we're eventually going to retest this 25K macro support. 25K is the strongest support on the entire chart right now, or at least in the immediate future. I guess, 19K is pretty strong support as well. So, coming back and testing 25K is what I think is going to happen. I think it's, basically a waiting game before 25K gets lost, and that we try to test lower. So if 25K is lost, or, I could probably word it as when 25K is lost, we're looking at, 23K region first, and then the 19K region after that. I don't want to, I did word that as a bit of an absolute with the when wording, but I am pretty confident that it's kind of inevitable. But at the end of the day, guys, nobody knows what's going to happen. I don't want to sit here and word it like, I don't like that I use certainties with my wording there. So, but to be clear, I think, right, that 25K will eventually be lost. We'll probably trade down towards the 23K first. What will most likely happen is 23K will be front run. You'll get your next dead cat bounce cycle before downside continuation to 19K. Whenever levels are obvious, so let's go ahead and delete the crackhead drawings. What we're looking at right now, these levels are incredibly obvious. It doesn't matter what type of trader you are. 23K and 19K are regions or levels that every trader is going to have marked out on the charts. It's a really important lesson, guys. When levels are really obvious, you never just cleanly test and get just a very standard response from them. The two ways that it generally plays out are either front run or blasting through. So I think that what will happen with 23K is that it will likely get front run before the next dead cat plays out. And I think that the 20K level, 19K level will get blown out. One of the main reasons why I think this level will get blown out and aggressively traded through is that this is the area where everybody thinks that they're going to buy for the next bull run. I see those charts every day on Twitter. We're going to wait for this to round out, trade down into 20K. I'm going to buy 20K, and then I'm going to do nothing, and I'm going to get rich next cycle, right? Well, to be clear, Bitcoin's not really going to... Bitcoin's just a good area to park capital when you want to be allocated to risk. Bitcoin's not going to have some ridiculous returns. It's going to make you go from poor to rich. I can say that with pretty high certainty, Think about how high Bitcoin could realistically go next cycle. So that's kind of how I'm viewing it. To be clear, when I say that I think that the 19K level will get aggressively traded through, I'm not saying that, that I'm not trying to be uber bearish. I just think that blowing people out and waiting for it to kind of reclaim and bounce back is the most likely way that I'll want to play this. So I think that, trading aggressively and then just blasting through people's dip buying process is the most likely way. If everybody collectively thinks that this is where you're going to buy and ride it out to the next cycle, yeeting through them, making all of them puke into the larger bids is probably how it ends up playing out. So yeah, that's pretty much it for higher time frame. I do subscribe to the next cycle argument. People that talk about Bitcoin will never make all-time highs again. I don't really even care. To be clear, I don't really even care if it does or if it doesn't, but I do think it will. But it's just probably not going to happen as quickly as people think it will. People talk about, we're not that far away from 2024, right? The year's, 3/4 of the way over right now. 2024 is right around the corner. People talk about the bull cycle happening next year. It probably is a little bit further out, like 2025, 2026. So you're going to have to be patient with all this stuff. But, that's pretty much it for the higher time frame. TLDR on it, boys, is that 25K is macro support. I think that ultimately this is going to lose steam in the not-so-distant future, and that will result in a dead cat, rounding off the momentum for the year. Market will trade down. It will dead cat again. So basically expect a reciprocal of what we've seen the first half of the year to play out on the other end of the year, right? The exact opposite of this structure is probably what happens. And I'll go ahead and remind you again, go and look at the price action from March, April, May, and maybe even June a little bit of 2021. Go study that and then look at this. See the strong comparisons between the two. I don't believe in fractal trading or anything, especially not on high time frame. But you guys probably all know that cliche that history doesn't repeat, but it often rhymes. There's very strong similarities between now and then. So that's pretty much it, boys. If there's any questions on this, I think my stream delay is a little bit higher than I'm used to it being. So if there's any questions on this, throw them in the chat. Any confusion, I can go ahead and cover it again. But otherwise, we'll probably go ahead and move on to the medium time frame. So here's where we're at with the medium time frame. These were my plans at the beginning of the week. I'll cover my trade. So where we're at right now is at the very beginning of the week right here, my expectation was that either A, we would trade up, take out these highs into local supply and re-accept into this multi-week value right here, and then likely oscillate around it. What it looks like we're doing is we're accepting outside of it. So I did get long yesterday at 26.6. Actually, let's look. Yeah, 26.6, or basically you'd call it 26.7. I think that, yeah, I mean, more or less what I'm waiting for it to happen now is to see some degree of sideways price action up here, which is going to mark acceptance, which will likely result in the next leg up towards the 28K region. I'm not trying to hold this long for, new highs or anything like that. It's definitely not something I'm subscribing to, but I do think I could probably squeeze another 1,000 points out of it. So yeah, that's what I'm looking for. Sideways into into major resistance, and I'll be aggressive to take profit. If we start to trade up into the 28s, I'll aggressively take profit. One thing I didn't really cover. Let's go back to the high time frame chart really quickly, and let's change it to this chart. Nope, change it to this chart. There we go. Ignore the drawings, but what I'm looking for, so I'm bearish overall, right? I'm short-term bullish, more medium or higher time frame bearish. But something I'm looking for that I wanted to cover, guys, is that if we do re-accept into this larger composite up here, so basically if we start to get back above 29K or 28.8 to be exact, and we start to see sideways price action above that, that's going to be invalidation for my bearishness, because we'll probably be accepting into this value and trading up higher. So yeah, I mean, this is my bearish invalidation. This region up here is incredibly strong resistance. So I think that betting on shorts as we trade up into that region is pretty smart, and then your invalidation is pretty tight if you're wrong. So if you're wrong, you take your L and you get bullish. Pretty simple stuff. But I'd rather get proven wrong on my bearishness rather than get carried away and swing for the fences. So that's pretty much it on Bitcoin, guys. I don't really have too much else to cover. It's more or less a waiting game. Like I said at the very beginning of the stream, before I really got into anything, I'm really inactive with Bitcoin right now. Normally, I'm a pretty consistent intraday Bitcoin trader, but with what's happening with altcoins recently, you can look at my scalp list. These should be all names that you're quite familiar with now. The scalping opportunities have been ridiculous. Getting 5% rotations in a 1 minute candle and stuff. It's been wild. So that's been my core focus, definitely, just because that's where the opportunity is at. That's where the volume is at. We have shitcoins that are, 100 million market cap, and they're doing as much volume as Ethereum. It's insane. So I'm going to catch up with chat, and then we'll probably move over into altcoins unless there's questions pertaining to Bitcoin. Let's see. Will you short altcoins, especially the ones that you have gone up the last few weeks if Bitcoin starts puking? So go over to my altcoin list really quickly. I do have a couple altcoins. I mean, I have a couple altcoins that I am looking to sell. The reality is that pretty much every altcoin, so this is just my blank trading list of coins that I don't care about. Pretty much almost all of these, probably 95 or more % of these coins are in strong downtrends and probably could be shorted. Am I going to short altcoins? Probably not. It's not really something that is my style that I've had that much success with, to be honest. I have nothing against doing lower time frame shorting, but I really don't like running swing shorts on altcoins that much. So if I think Bitcoin's going to go down a lot, I'll probably just short Bitcoin and maybe ETH. That's my style or approach for it. I'm not saying that you can't short altcoins. I just don't really like to. I don't like how the funding can just get wild. As this is something that a lot of you guys have learned over the past few weeks. You know, it's not that uncommon for altcoins because the markets are so illiquid. It's not uncommon at all for spot and perpetuals to get really disjointed. So you really only have the opportunity to short altcoins on perps, right? There isn't really major futures markets for altcoins. So I would probably, instead of taking swing shorts on altcoins, just short futures on Bitcoin and ETH, because those markets are, I don't have to worry about the funding rate, and they're going to be more liquid than most of the altcoin perps. Hopefully that makes sense. One of the, something else that I didn't cover is that you could, find a perfect altcoin short. Let's say I get it momentum loss, SPF, whatever kind of trade setups you take, you short it. That's a long. You short it. Everything's going great, right? All of a sudden, one big player market pukes a short, and it goes like this, and then other people start puking shorts, and you sat in a short for 3 weeks, and it just printed for you, and then all of a sudden, a couple people start puking their shorts, which trigger other people to puke their shorts, and then boom, you round trip the whole trade. That's not something that is really that likely to happen with Bitcoin. But with altcoins, because they're so liquid, that kind of scenario happens a lot. So hopefully that all makes sense. I've just had bad experiences trying to swing short altcoins. It's just not really my style. On the flip side of that, which is going to sound a little bit hypocritical, I'm aware, I do swing long altcoins all the time. That's probably a sufficient explanation there. Do you think that people who are now saying that we will buy 20K when we get there will lower their targets, so it's a good place to buy after all? No. I mean, you will. That's an interesting take, TK. You likely will have people that will do exactly that. That's what people do because people are chicken shit. People will collectively say, we're going to buy this area, and then it gets there and they're too scared to do it because you're in a local downtrend. That is definitely something that will take place because, like I said, people are chicken. But you also will have people that will just blindly buy that. So no, I 20K is such a incredibly obvious level to everybody that I still think that we'll follow my plan of blasting through it. But to be clear, I'm not Nostradamus out here. I don't really know. That's just what my gut tells me. And with higher time frame, that's all I can do is share my gut reaction to things. Do you only play continuation for scalps? It depends on what the market environment is. Recently, yep. With these ridiculous cartel coins, it's just been trend continuation only. Well, we can get into that conversation more in a minute here. So I'm gonna scan through some altcoins really quickly, and then we'll probably move over into the scalping conversation. I like to do more of directional trading. We'll have luxury of time. I mean, you and everybody else, bruv. Like, pretty much everybody's directional trading for the most part. There's, at maximum, like 1 or 2 people in this chat that aren't directional traders. Everybody's a directional trader. Most people don't even understand the concept of how you could trade without direction, which we're not going to get into today. Okay, I'm going to run through some... 12 hours probably fine. Let's run through some charts. So one coin that I'm potentially looking for a short on, which this would be, you know, I'm going to go ahead and contradict what I said earlier when I was responding to who asked that question, to Fern. Gonna contradict myself a little bit. Here's a couple of examples of things that I might potentially look for swing shorts on. So OP is one. I think that OP's structuring is horrible. I think, are we trading below the yearly open? Almost. The yearly open's right here. Structure started off really strong on OP, and currently it's super weak. So every bit of the VWAP structuring is bearish right now, except for like the monthly, which I don't really care about with higher time frame. So what I'm looking for with OP is to see it continue to trade up, which, you know, if Bitcoin follows my plan, this is probably what will happen. So I want to see OP trade up and do major resistance and potentially take a swing short on it. This is basically the name of the game for all altcoins that I'm bearish on. Wait for them to drift up higher into major resistance off the back of Bitcoin trading up, and then bonk them. These are things I would not be trading massive size on to account for the higher vol and account for the, you know, potential round tripping scenario that we just discussed. The major size for me would be going into Bitcoin and potentially ETH, but this is a setup that I'm looking for. Very similar setup across the board on a lot of these altcoins. A lot of them have local uptrends that I'm waiting for them to trend up a little bit higher and lose steam into resistance. So INJ is another good one. INJ was one that I was really bullish on all year. If you zoom out to the beginning of the year, this thing had really strong trend structuring for a while. Pretty simple play. We'll go ahead and slap a risk reward tool on it so that it's a little more simple for you guys. Looking for something like this probably. And then, you know, the invalidation isn't too rough. If I get invalidated on a setup like INJ, that would be a really good reason for me to pivot and look for longs, right? So if this thing starts to get back above this major HVN and above quarterly, then I would be trying to flip this and look for longs, right? Because if it is able to get through this resistance area, you know, it's starting to look like it actually has bullish structure again at that point, because it still does have higher lows throughout the year. So this isn't a prime time short. I do like OP a little bit more than this one, but this is an example of something I'd be looking for. Another one is Solana. Solana, you know, all these shitcoins have local uptrends, so I'm waiting for them to trend higher. I think that Solana, you know, what's happening with Solana is right now is that people are definitely getting carried away with the FTX liquidation conversation, right? FTX has a whole lot of Solana that needs to liquidate. So people, you know, start shorting, which is really stupid. So the name of the game right now is wait for the shorters to get blown out, wait for Solana to trend up higher, and then short it if that's what you want to do. So Solana is potentially a good one. High, like macro, or like on the highest time frame on the multiple year time horizon, I'm actually pretty bullish on Solana. I definitely do want to hold more Solana. I do actually hold spot Solana, and I do plan to buy more, but I do think in the meantime it's probably going to trend down. BCH, another good example of something that could potentially be a really strong short if it trades up into major resistance. This wouldn't be my favorite one because BCH is really illiquid. It's far more illiquid than something like Solana. So you could get really blown out and slipped hard shorting this one, but it is one that I might try to take on smaller size. So that's pretty much it for, you know, these are kind of the examples of what bearish coins look like. You can go ahead and look through the rest of the perps yourself, and you're more or less going to see the same type of structuring. A lot of these random shitcoins down here are going to look similar, but be even weaker, actually. So, yeah, I mean, do that on your own, guys. Good homework for you. So let's go ahead and run through some coins that look good. Let's do the counter side of the argument. I still think Ant looks good. It's been really rough to trade for like a month and a half. Very, very choppy. I think it's a matter of time before it trades up. So this is one that I'm always trying to catch the breakout on. I do have an Ant long open right now. The problem with Ant very similar to some of these other coins that we talked about. Actually, far worse than these other coins that we just talked about, and to this very low volume, low liquidity. Same issue with Tomo. So these coins are really good to trade, but you have to be very careful with your sizing on them. To be honest, actually, most of you probably don't have to care, but if you're a little bit more serious, you need to care about your sizing and trade quite small, because these things are very illiquid. So kind of a similar conversation with Tomo. I've been waiting for it to trade down lower. Basically, I want to see it trade down into the dollar region, and then, it's pretty strong probability that I think we can get it to bounce towards the 140, 150 range, which is like a 40 or 50% move. So it's potentially a swing long I'd be looking for. I have no positioning on this one. Maker continues to be a really strong coin. As you can see, it did front run my bid area by a bit. Let's see, in terms of percent. Okay, I mean, maybe it's not quite a bit, 8%, but this was something I was looking to long, which would have worked out perfectly if it just traded a little bit lower for me, but it is what it is. So, Maker still looks pretty good overall. Rune still looks really strong. It would not surprise me at all if the next time I look at this chart, Rune is up at like 220 or 230, to be honest. Last one to cover is going to be Tron. I never trade Tron. I hate trading Tron. If you look at this chart, it's absolutely vile. This is disgusting price action. This is a 12-hour chart, and these kind of illiquid moves look like, we're looking at a 1-minute chart or a 5-minute chart on a low liquidity coin. Tron is, a larger cap coin, so it's mind-boggling to me that it looks like this. But the simple thing is that you cannot ignore the fact that it has strong structuring. So I'll sit out and happily miss any moves that happen on Tron. It looks good. Trend structure wise, the price action is just absolutely vile though, so I'll go ahead and miss it. That's pretty much it. I'm going to go ahead and check chat real quick. What's wrong with Bitcoin? It's jumping up and down. This is pretty standard looking price action here. I don't know what you're talking about. You gotta stop out longs before you go up more. Simple. Let's see. Let's be honest, there's 0 directional traders in here. Yeah, you're definitely right. I was just trying to be nice about it. Non-directional traders do exist. I have friends that don't trade direction. But when we're talking about social media and retail traders, definitely 99.9% of them are going to be directional traders. I like this stream. Well, thank you. Lear with the dad jokes. Let's see. How can you tell when the directional trend is diverging at the lows? My biggest problem is I set alerts, but I'm not confident in the order flow data or the oscillators to start adding size. Simple, my friend. I simply don't do that anymore. With scalping and stuff, I do that very confidently. Identifying the turning points with scalping. And betting on that for quick moves, and then I'm out aggressively. With higher time frame stuff, I simply don't do that. I wait for something to have a very obvious trend, right? So like, I don't want to use Ant as the end-all be-all example, or let's do Tomo. We're gonna cheat. We're gonna cheat here. We're gonna delete all this. We're gonna go back to when Tomo was the god coin in the market. Instead of big alpha boys, focus the fuck up here. Instead of trying to identify the key turning points in a market and when you should be betting on the market turning around and going the other way, which is very difficult and you will probably not succeed with, just find something that has a clear trend and bet on trend continuation when it does pullbacks, right? So when Tomo has this orderly trend structure like this, wait for it to dip into major support and just buy it, right? Instead of something's trending down, instead of trying to be the Chad that buys the Pico bottom, I bought here and then it went up. Just be the guy that buys here, right? And then gets trend continuation. Your expected value on that trade is going to be a lot higher. I feel very confident that if you just turn your brain off and just be a trend follower like that instead of a trend, reversion predictor, you're going to win a lot more. That's pretty good, honest advice right there. Being smart is for stupid people. Catching the Pico bottom of some coin, right? Let's go and find we can just pick any random coin. Let's go and probably mask, right? Okay, mask. This is essentially what 95% of shitcoins are going to look like right here. Instead of trying to find a coin like this and going, I'm going to buy the Pico bottom of it and then I'm going to get ridiculous returns when it goes up, right? No. Just only long it if it looks like this, right? If it looks like this, wait for it to pull back into support, buy it, and then bet on trend continuation. Your expected value on that is so much higher. When you do the opposite, where it's trending down, obviously, and you try to buy it for reversion, sure, you can get a little dead cat bounce out of it, but if you think you're going to catch the trend reversal, you're going to have a lot of stop outs, a lot of unnecessary losses that way. For hard time frame stuff, especially on altcoins, I just play trend continuation. With Bitcoin and stuff, I do try to identify the turning points a lot more, but it's because I'm good at that. You're not gonna do that with altcoins. It's very, very difficult. So soak that lesson up and stop trying to be heroes and clout collectors on Twitter. All that clout collection, the bottom tick, the top tick. I'm top tick Terry. That shit is not real trading. Kobe had a good post about trying to nail the Pico bottom. Right, this is a common trading platitude. If you just, you want to just capture the meat of the move, and that's how you make money. It's a very, very common platitude right there. I tried my entire life to be smart, but I'm just dumb. Just stop trying to be smart. I say that quote all the time. Being smart is for stupid people. I don't really see much value in trying to be smart. I think if you just stop trying to be smart and just accept you are what you are and just be open-minded to everything, that's how you actually have a chance of being very smart. Trying to be smart is how you end up in the middle of the distribution. Just be. Picking bottom gets you stinky fingers. What do you mean by that? All right. So caught up with chat. We are officially 52 minutes into the stream. Well, realistically, more like 45 because we did our little music intro. Hopefully YouTube doesn't censor that. They probably will. All right. It's time to do some lessons here. So I'm going to take a quick second to get water, and then we're going to get into some scalping lessons. All right. Reminder to stay hydrated. If you're sitting at your computer all day long, I think it's mind-boggling how the kind of feedback I hear about people that don't drink enough water. It's crazy. I'm not sitting here saying I drink the recommended amount because I think the recommended amount is like 2 gallons a day or something insane like that. But I come pretty close to it every day. So drink your water. Okay, let's go ahead and run through a couple of lessons. So first things first, with scalping, we're going to talk about definitions. Now, there's definitely some wiggle room in these definitions. I don't want you to think that they're hard set rules, as those of you that follow me on Twitter have probably seen with the conversations with some of the other traders that I chat with, that having hard set definitions around these things is maybe not the best. but it is important that you have a loose understanding of what these things should be defined as. So when people are talking about scalping, it should be in and out, not I'm holding something for 4 hours. That's something that we see on Twitter all the time. I can't tell you how it makes me want to rip my eyeballs out of my face when I see somebody on a 12-hour chart talking about they want to catch a 60% move on an altcoin and they're calling it a scalp. That's a swing trade, bro. That's a swing trade, right? Scalping is you're in and you're out. So it largely depends on what market you're trading. If you're trading a high liquidity market, for example, something like if you're trading the NASDAQ futures, then you can be in and out within seconds, and that could be a scalp. Your average trade could be 30 seconds. With the kind of low liquidity altcoins I trade, it takes a lot longer because I have to scale in and scale out. But simple logic is that with scalping, it should be non-time based. Your hold time should probably just be a couple minutes or less. If you're holding for any longer than that, you're doing it wrong, and you're probably made major mistakes with your trades. So, if you want to call yourself a scalper, guys, you should be trading with in and out within minutes, and potentially you should be aiming for even seconds. But it really largely depends on what you're trading. If you're trading lower liquidity altcoins, seconds is just not going to be doable. The reasoning for that, guys, and somebody asked me to talk about execution with lower liquidity coins. So if you're trading these cartel coins and you want to scalp them, because I know that's very, very flavor of the month recently, you cannot cross the spread. You cannot use market orders because they're low liquidity. So you're going to get slipped when you market order, and on top of that, the fees are quite high on crypto perpetuals. So if you want to scalp these things, you need to be using limit orders. So a combination of resting limits, which are standard limit orders that you click and place into the book, which you should be familiar with, and chase limits. That's how I do it. A combo of resting and chase is how I execute my scalps. Because of the fact that you have to use limit orders, you should be prepared that they're going to take slightly longer, because there's a period of getting in and a period of getting out. So my average trade duration on scalps is probably something like 5 to 10 minutes, which is quite long for traditional scalping, but it's because, right, there's several, it takes me a couple minutes to scale in, a couple minutes to scale out, which adds time to the trade. So study this kind of concept. If you're holding a trade for a couple of hours, you're day trading, which at the end of the day doesn't really matter with these definitions. The one thing that I would really hold on to, and the kind of rock I would die on, is if somebody's in a trade for many hours or many days potentially, you're not scalping. If somebody's posting a 4-hour chart talking about scalping, they're not scalping. So really getting hung up on this stuff doesn't matter because it's quite subjective, and you could kind of loosely define these things. But something that we should really hold on to tightly with this conversation is trade duration, right? The objective of scalping is to get in and get out and move on to the next trade. If you're holding on to trades for long periods of time, then you're reducing, you're nullifying the whole point of scalping. Which you can go ahead and open up this right here. So let's make this a little bit bigger for you guys. I know that most of you guys are blind, so we'll make it bigger. That's as big as it'll get right there. Time and variance. So time decay. I'm not gonna fully explain these as well as I would with some of my other education, because I don't know if you guys deserve it necessarily, but we'll loosely explain it. Time decay is the concept of the longer you hold risk, the less edge, or the lower the expected value is on it. The reasoning for this is because more and more factors in the market come in, right? So let's say you open up a trade. You open up a trade because some other trader gets blown out and you want to fade them. That's a very legitimate approach to trading, right? On lower time frame, you see somebody else get blown out and you fade them. Well, the longer that you sit in that trade, the more variables are entering the market. The more people are opening shorts, the more people are opening longs, the more interactions are happening in the spot market, this and that. The more likely you are for a news tweet to come through and affect your market. So the longer you sit in a trade, the more variables enter and the less likely of a positive expectancy you are to have. That is very important that you understand that concept. That's why approaching it with a quick in and out mindset is important to have, because it reduces the decay on your edge, assuming you have one, which most of you guys don't have as strong of edges as you probably think. Let's be real. The next thing is about variance. So I actually saw a tweet thread on variance yesterday, and I wanted to just reply this guy, but I chose not to because I try to be wholesome on Twitter and trying my best to not be confrontational and toxic. But I saw a tweet thread yesterday about how traders should trade less because you reduce variance that way, which is completely illogical. Actually, the basic law of big numbers is that, the more trades you take, or with, we can do a poker example because everyone loves the poker examples. The more hands of poker you play, the more likely you are to have the randomness get smoothed out. So let's do a simple poker example. If you have a strong hand, let's say you have pocket kings and then on the river you get a third king. You have a very strong hand, and you have obviously the two other cards matter a lot for your risk to reward, but I'm not a poker player, so we're going to keep this real simple. I'm dog shit at poker. So let's say you have three kings and you have a very high probability of winning. There's always the possibility that even though you have 80-something% chance of winning when you calculate your odds, there's always a probability that something goes wrong. Maybe that very last card that comes out gives your opponent a hand that is better than yours. That is variance, where even though the odds were in your favor the whole time, somebody randomly gets lucky and beats you. The more poker hands you play, the more variance gets smoothed out. That randomness where you randomly lose even though you deserve to win gets smoothed out through playing more hands of poker. It's the same concept with trading, particularly with lower time frame stuff like scalping. The more scalps you take, the smoother your variance is because you're taking more trades, right? So the random trades that go against you get smoothed out with a larger data set. So these are two really important concepts, time decay and variance. I think that you guys should go ahead and think on those on your own. All right, I'm going to take a pause from the serious conversation, and I'm going to catch up with chat here. Let me know if there's any confusion around this stuff. I think I've done so many presentations on these conversations now that I know that I definitely explained that properly, but if there's any confusion, definitely let me know. Every smart person I know never describes themselves as smart, but instead curious. Yeah, that's a good take, Troy boy. People that call themselves smart and stuff are like more often than not like the actually dumb people. Let's be real. Clinging to the idea of being I'm a smart person is definitely for stupid people. People should Google what a scalp is. What's up, Mr. Stop Loss? I'm doing well. Tap water? No, I don't drink tap water. I mean, there's nothing wrong with tap water, to be honest, but no, I drink super filtered water. I have reverse osmosis at my house. Actually, I have two different filters. I have reverse osmosis and then a secondary filter. We filter our shit. Hard to scalp most days because volume isn't there. I like this comment. I disagree with this comment, but I do like it because it opens up for a good conversation. If you want to scalp, it is your job to find where the volume is. I'm not talking about scalping Bitcoin. If you've been scalping Bitcoin the past few weeks, you're having a rough time. You need to go and find the high volatility shitcoins that have lots of volume getting pumped through them. Some of these, these lower liquidity altcoins have they have volume matching Ethereum with 1/25th of the market cap. You need to identify where the volume is at and go and trade them. And when there's no volume at all, because that does happen, sometimes Bitcoin's dead and altcoins are dead, just don't scalp. I go long periods where I'll potentially go weeks or months without really putting in a lot of scalping sessions because the opportunity is not there. When the opportunity comes through, like has been present for the past 4 or 5 weeks, I go hard. I've been scalping a lot, which today, let's go ahead and look. Yeah, to be honest, I could be scalping TRB today, most likely. So you guys are welcome that I'm sacrificing my own trading session to drop education on you. Scalping on Rollbit has been a godsend for me given the fee structure. Yeah, I don't know about that, but to each their own. I think the fee structure argument is a scam, to be honest. Sure, when you're wrong, you don't pay fees. That's great. But I mean, who the fuck is trading with the expectation? Are you trading with the expectation of being wrong? When you're right, they take a larger percentage. They take a much larger percentage than you would if you're trading perps when you're right. So yeah, as a scalper, you have to have a high win rate. If you have a low win rate as a scalper, then there's no point in even trading to make money. If you have a low win rate as a scalper, you should be scalping to learn with small size only. You need a high win rate as a scalper. What's your opinion on hedging positions and taking advantage of highly negative funding? Works pretty well with BLZ and TRB. My guy, like stop loss. Explain to me exactly how you're taking advantage of that funding. So if funding is negative, that means you need to long the future, long the perp. How are you hedging that? There's only 2 ways to hedge your perp. If you're perp long, the only ways to hedge it are to hedge on a different perp. So for example, if funding is maxed out on Binance, you could go short, you're long on Binance to collect that negative funding. You could go short on Bybit theoretically, but the reality is that Bybit has a fucked up funding rate too. So that's not really an option. Your second option is to be long on and to catch that negative funding and then go and short spot, which is not really something that is going to work for you either, because there's very few venues that let you short spot. And on top of that, that would be margin trading. On top of that, there's a borrowing rate on shorting, on shorting spot as well, which is likely expensive. So if you want to short BLZ or TRB spot, it's going to be way too expensive for you to do, because if you weren't quick to borrow, you're paying a very high borrowing rate. So taking advantage of arbitraging these high funding rates is not really an option. If somebody has, I'm more than welcome to have somebody give me a response to prove me wrong on that, but that's not really an option. The only real way to benefit from the high funding, guys, is to just take swing trades. If you can catch the trend somewhat early and ride a swing trade on TRB, for example. TRB was hot last week. Funding was maxed on TRB all week long for the most part. I think maybe there was only a couple funding cycles where it wasn't maxed. If you can sit in a swing trade for 5 days and collect that funding and benefit from the market going up, there's no hedging dynamic going with that, but that's how you benefit from that stuff. Great section on this in the Brent Donnelly book about this. Okay, I don't know who that is. Being able to market in and out any size multiple times changed the game for me. Bad scalper equals only profitable on Rollbit. I mean, yeah, okay. Again, I'm not gonna promote that or push anybody in that direction. I'm not supportive of bucket shops. On top of that, I really think that if you want to be a successful scalper, you need to learn how to trade futures or trade perps in crypto. Futures in legacy, perps in crypto. Think on your own, question mark. Please show us entry, stop loss, and take profit. Classic. A mid-curver paradox, indeed. Indeed, Ape. Is there any counterparty risk to using in Silico Terminal? No, because your keys are stored on your device. So if you log into your terminal account on this computer and have your keys put into it and then go log into it, you can log in with the same username and password on a different computer. If you've never used that computer, it's not going to have the keys, right? Your keys are stored locally. I am not affiliated with them in any way, so if something goes wrong with Terminal, I am not responsible. Thoughts on Bitcoin right now? Hit the replay button when the stream is over, brother. I already ran through my whole Bitcoin thoughts. I spent like 30 minutes on it. What is usually your bread and butter when trading? I'm an adaptive trader, so it's all about what the regime is, right? If Bitcoin, right now, Bitcoin's low volatility, very low opportunity, so I'm a scalper these days, right? I've been going crazy scalping for the past 4+ weeks. It's been, super grateful for the scalping opportunity that we've had recently. If there's momentum in the market, I'm not going to type it out for you. If there's momentum in the market on the benchmarks, I'm trying to swing trade the benchmarks and chase beta with shitcoins. If there's no momentum in the market, but Bitcoin's still moving, I'm probably intraday trading Bitcoin. If there's no momentum at all on Bitcoin, but shitcoins are moving, I'm scalping shitcoins. Those are basically the three approaches I take to trading. I'm either swing trading and chasing beta, or I'm intraday trading Bitcoin, or I'm scalping shitters. Scalp on Woo. Psych. Nothing against Woo, but you don't like on-chain scalping is not a thing yet. There's no liquidity on those platforms compared to talking about Binance perps, talking about a lot of liquidity. NQ and ES have been great price action these past few days. Yeah, I don't doubt that at all. The price action on these cartel shitcoins has probably been better if you can handle the volatility, right? The volatility is gnarly on these things, right? They can move 6% in a 1-minute candle, which for most of you is probably going to blow you the fuck out if we're being honest. So it takes big balls and ice in your veins to be able to handle that stuff. But if you can learn to handle it, you can print. The stream has been insanely useful so far. Thank you, Mag. No problem, Mike. Cheers, my guy. Do you listen/watch the tape when scalping shitcoins or BTC? No. I don't really tape read. I think tape reading is too discretionary for me. I'm using footprints and tick charts. That's pretty much it. Footprints, tick chart, open interest. Easy. Hey, Elrod doing my job for me. Thank you, Elrod. Hit the fucking like button, boys. Help pump up my numbers for my first stream so the YouTube algorithm likes me. And makes up for the fact that I've used profanity more than I should have. I need that like button to make up for the profanity. Somebody wants me to shield the Paragon group. Tell us more about the Paragon group. Is it only educational and market thoughts, or do you also do trade ideas and live trading? I do it all, my friend. I do live trading and I do education. At the beginning of the week, I share my plans for the week in great detail. I share my trades mostly in real time. With scalping and stuff, the reality is with scalping, probably only maybe a quarter of my trades can really be shared in real time. There's a setup that I shared last week, which I'm not going to leak today, but there's a setup that comes several times per day, like clockwork. That's one of the only scalps that I'm able to consistently share, beforehand in the group. But yeah, we do it all. Last week I made 3 scalping videos and shared a bunch of trades. Do you use VWAPs? Do you use daily VWAP to scalp with price action or other indicators? I'm feeling generous. So this is what my TradingView scalp setup looks like. Now, obviously, I would not be scalping mask. This is disgusting. But go to TRB. This is what my scalping setup looks like. So I use daily and weekly VWAPs. I use open interest. I use relative volume. I use delta. That's pretty much it for TradingView. I very heavily, this is my main chart right here for scalping, and then I very heavily rely on my ATOS setup. My ATOS setup does wonders for my trading, I will not lie. But yes, I definitely use daily and weekly VWAPs. Hope you're doing good. NETA, big picture on Bitcoin, thank you. When the stream's over, go back and watch the beginning of the stream. I did all my Bitcoin rundown. I spent like 30 minutes on Bitcoin. Woo has deep liquidity on their decks. Tell me you're a Woo affiliate without telling me. That might be fine, but still, on-chain is not ready for scalping. You could swing trade over there probably. Best open interest indicator to use? Literally open interest, boys. Look. It's built into TradingView now. Just use that. Don't need to overthink it. Ivan, I think you need to click refresh because you're seeing 10 likes. I'm seeing 74. But yeah, what Ivan said, we need to pump those numbers up, boys. Press like. Where can we learn more using tick charts? Honestly, the main thing you should do with tick charts is just load up a tick chart and watch it yourself. That's the best way to learn. Not gonna lie. You don't need to overcomplicate how to use tick charts. If you want to learn from me, you can join the group because I have a lot of education on that stuff. Tick charts are very integral to how I scalp. Almost a 2-year anniversary indeed. Thank you, Lear. Lear's been with us since day 1. So we definitely appreciate Lear's hard work. The #1 group member / employee right there. Do you use, you forgot that word, do you use aggregated open interest or specific open interest to exchange? I pretty much just use specific. Thank you, Callus. Appreciate your recommendation. Big balls and lower leverage. Yeah, that's a good comment from Nikki, right? If you're trying to scalp these shitcoins, you need to not be using big size, right? The kind of size I put behind a Bitcoin trade compared to one of these altcoin trades is a very, very big difference, right? We're talking about, my Bitcoin trades are probably 10 times bigger, potentially even all the way up to 20 times bigger, where I'm trading much smaller on the shitters. I don't want to read that message fully, but I'll skip to the end. No, you do not need to worry about stop losses getting hit from trying to ape in. Our group is much smaller. I don't have anything against that other group, though. I'm friends with a bunch of those guys. But we have a much smaller group, and most people really don't join the group with the intent of copy trading. Most people join the Paragon with the intent of actually learning to do it on their own. If you scalp on the 4 hour, you do it on Woo Banger. Are you using auction market theory rules with VWAP div bands? You bet. I mean, everything I do with trading is around auction market theory rules, because that's integral to how I understand the markets. Which time frame for scalping? 15-second, baby. Most of my scalping isn't time based. Most of my scalping is trade based. It's on tick charts. Well, you're goat. Well, you're goat indeed. I was also talking about the perspective, like I was long BLZ from 12 cents, but once it was facing resistance at 16.5, I used a hedge on the perps and close it before the funding cycle hits. I mean, at that right, funding cycles are every 8 hours. You're really hedging to hedge out for a couple of hours. You just either close out the long or just take the risk of it going down. I don't really think it makes sense to be hedging when the funding rates are 3%. For intraday or longer, do you use aggregated OI? No, not really. Maybe I probably should, because the difference between Binance and Bybit is a lot less noticeable these days. Binance used to be magnitudes larger than Bybit, but it's not that Bybit's gotten larger. It's just that Binance has gotten smaller on Bitcoin. So maybe I could make the argument that maybe I should be using, I should probably be using aggregated for intraday, but I still don't. I just use this right here, which is just Binance. Refreshed, LOL. Refreshed indeed. Live stream 10 out of 10. You should do more often on YouTube. Yeah, I think I'm gonna maybe do a poll or something. I've got very conflicting feedback about the differences between between YouTube and Twitch. I'm growing a small account. Please advise. Any advice, please? That's a very difficult question for me to answer, man. It's a little bit too generalized and unspecific. Learn how to control your risk. Develop edges. Learn how to understand your own psychology. Those are the 3 pillars of discretionary trading: risk management, edge, and psychology. Work on those if you want to make it. If you want to be able to grow an account, you need to have all 3 of those mastered, or at least partially. All right, boys. I caught up with Chad here. So we're probably going to wrap up the stream here pretty soon. I covered a lot of the topics I wanted to cover. Definitely leaked a lot of useful information, as I always do. If you don't already, definitely subscribe to the YouTube channel. I'm probably going to stream on YouTube more. But I also put out a censored version of my weekly plans. So my weekly plans are somewhere, between probably 18 minutes to like 30 minutes. And Lear takes that for me and censors it down and puts out like an 8-minute version on YouTube, where a lot of the stuff gets purged out so that you guys can't see it, but the core plans are still there most of the time. What are the orbs on my screen? They're market orders. More educational videos coming as well, indeed. Indeed. Yeah, we put out the Outlook every week. We put out a YouTube short every week, and we have a lot of other stuff cooking. Lears definitely helps me a lot with that stuff. Thanks for the positive feedback in the chat, boys. Again, last time I'll say it, if you didn't press the like button, press the like button so that the YouTube algo knows that we're doing good things over here. But I think that's going to do it for me. I'd like to get out there and start trading. So I'm going to hop off the stream and go click buttons. But good luck, everybody. And I'll see you next week.